Good afternoon, everyone. Yeah, so we have only one high impact event today. It's going to be at 10 o'clock in the night. It's a speech from the Reserve Bank of Australia governor, and it will just be a speech anyway. So if you're awake at that time, then you can trade that. Yeah, some people called me early this morning, not even some people, but someone called me, said he had hit his target at 5 a.m. I was awake throughout the night doing some analysis. I think this charts you of Australia and Canada, and you made some money. So you can trade 24 hours a day if you're not aware of that. But anyway, that is something that people are now doing, and yeah, I was happy to hear that. But if you're married, if you're living with someone, it may be difficult to trade in the night. At 1 a.m. you're awake looking for some entry points. Anyway, it's quite difficult. But if you're mentally prepared for it, then by all means you can hit your targets during the day, and you can hit your targets in the night. So you can, because most of us trade only during the daytime. Like right now, when the sessions that are open are Australia and America and Europe. Those are those that are normally open at this time. But in the night, if you're prepared to trade Japan and Australia and New Zealand and maybe China, then you can be awake for that, and you can have, I always recommend that you have two separate accounts, one for trading during the day, another one to trade in the night, because that one in the night, it might need some calibration. You might need to get used to it somehow, to those charts of Australia and Japan, mostly those ones. So you have to be very well prepared for those ones in the night. And if you risk the money that you risk during the day, it feels different when you're trading these two different time zones. It's quite different. So that's why you should separate accounts. And always have a separate account for, you can have two separate accounts for that, but again, have separate accounts for your manual trading, separate accounts for your, where you put your signals, then a separate account for where you put your robots, then another account where you put your high risk maneuvers, where you're putting many lot sizes, where you put one trade, the moment it enters some profit, you multiply it by 10. So there, you can be taking a very big risk, but if you don't put that on your normal account, the normal account is where you trade normally, normal stuff. But these other ones here, you can try all sorts of things. People are very adventurous. You can't. It's very difficult to limit yourself to just one type of trading. But open other accounts so that if you feel like there are some entry points that you can trade that you're not very comfortable with, and you're being pushed to trade them on your real account, just put some small money on the side and take those risks on that other account so that you don't harm your big account. That big account is for those what you're very sure of, with a proper stop loss, a proper take profit, like that. And so you should be open to all types of trading. Even open an account with binary options. Go for those 5-second charts, and try out your luck. Do whatever you can, to have a taste of all these markets that are there. Because at the end of the day, it is the same market, and the experience you will have from another type of trading can give you a push in your other normal trading. You will be seeing some things that you saw the other side that you really see can work in a normal market, but on a different level. So you can keep on borrowing ideas from here and there. Where you took a high risk maneuver, you can see the best possible entry there, and then you can apply it in a moderate way on your normal account. So about the technical analysis program we're having in November. The turn up so far, it is very big, and I'm very happy to see that so many people want to take matters into their own hands and trade, because for that group, there is no account management, there are no signals, There are no robots. It's now it's like in the jungle where I don't know which type of animal does that, but where they send one of the males that have grown up. They send it somewhere to go and it's like in human history, where they would tell a boy who has grown up that now you go in the jungle and come back when you have killed one of those animals, and come back with it. Then so that is what is going to happen, in a very nice way. It won't be very harsh, like that. But when someone is giving you signals and managing your account and giving you robots, then you might never trade. You might never really know what is happening there. And many years from now, right now, many people fear Forex trading for so many reasons, and for very good reasons. If you're scared of Forex, you have a very good reason to be scared. Even those who are trading, they are scared. Yeah. Sometimes you put in a trade and you can't even eat, because it has gone the opposite direction, and you're waiting for it to come out. Maybe you put in a lot size that you shouldn't have put. So when you're in that kind of, if the trade comes out, then you'll be relieved. But if it doesn't come out, then you will fear to go back. So many people have that fear for very good reasons and very valid reasons. But overcoming that fear is what I want to do with the technical analysis program. Because if people are giving you signals and all that, you might never come out of that fear zone. You'll be always taking chances where you shouldn't take chances. But if we know where to enter, then we are going to have it will be it's going to be better. It's going to be a lot better to trade like that. You know where to enter, you know where to exit. You can identify certain patterns in the market, and you know what is safe and what isn't safe. So you have a certain you're going to acquire an instinct. An instinct. Before you even analyze, you just look at the market, and your mind just starts drawing lines, and you look at it and say, you know what, this doesn't look very safe. Let me go on for the next chart, until you get a chart that looks very, very safe. And that will help you to trade different pairs, different charts, and it will also help you to overcome that fear, because you know what you're looking for. It's better than opening the market and you just see the market going up and you want to go up with it, then you enter to buy, then it goes down, you close your buy, you start selling, then it comes up. That can give you a very bad experience, and that is what causes the fear. Another thing that causes fear is account managers. You get your money, you give it to an account manager. Next thing you know, there's no money. And there's no money, and the account manager doesn't have it. It's in the market, and the only way to get it out of the market is by putting some successful trades. So that's another thing. You give your money to an account manager and then they fear, and it's always bad like that. But anyway, if the technical analysis program is starting on 1st of November. It's going to be comprehensive, and many people have already joined in. So you come in and have that instinct, overcome that fear, acquire a skill to analyze, to do some technical analysis, and take matters into your own hands. When someone gives you a signal, you can verify it and say, you know what, this signal is in the wrong place. Even if it works out, I don't want to be the kind of person who takes such risks. I want to only trade what I can verify that is safe, so that I do that over and over and over again. If you trade in a risky place and you make some money, you will trade again in that same risky place in the future, and you might lose a bigger chunk of money. So so to join that group, you can first start by joining the BVB Trade FX group, or Trading Dawn. Then you will get there. But to join the other side, you can straight away search for Real Technical Analysis, and you get to the other group. But this other group of Trading Dawn and BVB Trade FX, it is wide open. There are signals there, there are account managers, there are mentors there, robots, everything, everything is there. But for this other one, it is mainly, it is your independence. It is something that gives you that independent way of thinking where you stand on your 2 feet and you stand firm on your ground, and you trade. Or if someone directs you somewhere, then you can say, no, I can't go there. Wait, let's wait for this protocol A, B, C, D, and let's wait for conditions 1 up to 10 so that we head in that direction. If those don't happen, then I'm not taking that direction. I'm not going to trade in that direction. So that's what it will do for you. Yeah, technical analysis is something, it's fun, eh? It's fun. It's very fun. It's very much fun, eh? And yeah, let's take a look at some charts right now, eh, and see what is safe and what isn't safe. All the charts are on a 1 hour time frame, eh? So we're to do some quick analysis on so many charts, and we see which one you resonate with, and then you can see which one you can go with, eh? So we are beginning with the US dollar versus the Japanese yen, eh? Yeah, so for this chart, it has been bullish, eh, for some time. Eh? This is a 1 hour chart. It has been bullish for some time, and from the 4th of October, eh? So there's this bullish trend. Okay, not from the 4th, but from way below. This one was some kind of a sideways market, but then it became bullish there. So what we have right now, if you look at the, okay, we seem to be at a point of reversal. So this is the RSI. We have these tops. We have these 3 tops moving downwards, and then we have these 3 tops moving upwards there. So we have a case of diversion there, and yeah, you also have the MACD at the top here, then at this other top, at this other top. Yeah, you can also draw some kind of divergence on your MACD. So we have the lower highs, and here we have the higher highs. Eh? So here we could easily have a case of diversion, eh? And we have this this highest point coming from an overbought position in the RSI. So this is quite good, eh? Then the MACD, which has been dominantly above the 0 line, it has now crossed below. There was a brief crossing here, and now there is another crossing there that has gone below. You can see all these other MACD bottoms, eh? They are all stopping somewhere up there. Let me somewhere there. Yeah. So now the MACD has gone below all these low points, that had been giving these fake movements, these fake low points. And yeah, so right now the MACD has crossed below all these ones here. We have divergence and we have all that. So this could easily, this could be a reversal that we're looking at right now. And given the fact that the trend actually started from there, we can start tracing some points where we expect price to be supported. So with a Fibonacci drawn in this direction here, we have we mainly have areas of support. Okay, so we have point A is this 23.6, point B is 38.2. So right now none of these points have yet been hit, but if this is a reversal, then we are most likely going to hit this 23.6, and you can see it's already as a support level on this previous point here, where these high points began. So that area, that strong area of support, gives this 23.6 a significant level. 38.2 was torn through, then 50.0 is also significant. There is this area here of resistance, another point of resistance there, then another shy point of resistance there. So yeah, we could be in a downward trend right now, and price could be moving downwards. And if price hits to this 23.6, we have we shall have about 73 pips there. Then to the 38.2, about 151, and to the 50.0, about 216 pips. So that is something to watch out for. Then to get some, let me see if okay, this one seems fine. Yeah, to get some other good confirmation for price movement, we use the average directional movement index, the ADX. So looking at the ADX, I've zoomed in a little bit so that we have a clearer view. The ADX has moved above the, it moved above the 25, the 25 mark. It moved around above it. That was a few hours ago. So yeah, so this red represents selling, this yellow represents buying, and this blue line is the power line. So we have a lot of power, then we have the red above the yellow. So we have, it's giving us a bearish signal. So once this one dominates, this is going to start moving downwards. So we have enough signals pointing to a bearish movement on the USD. JPY, if it becomes bullish, then it will be, it will be something. Sometimes things happen, but we have so many, we have reason to sell. So the prices we are, I've already mapped them out. So there, that is, that's for the USD JPY. Move on to the next one. The GBP USD. That's what it looks like. So this one here, it has been quite interesting. Now, the area of interest here, we have price that has just hit this oversold position. Now, after it hits that oversold position, we trace back to another, to the highest point there. This one here is lower than this one. So we trace to this highest point, and then we look for this point here on the chart. So there we have this kind of divergence. We have the lower lows on the RSI, then we have the higher lows. And the MACD is dominantly above the zero line. So we have good reason to believe that this is a continuing trend. So what we do with this, after getting these 2 point A, that is point A, and point B, on the chart they are higher, then on this one here they are lower. Then the highest point it went was this one. So we measure how many pips are in between this other low. So that one has about 91 pips of the GBP USD, and this highest point has provided us. So if you had bought here, you would have made those pips. You would have made the money up to this high point, which is about it's about 84, about 84 pips. Now there, if price breaks up above this line, you can take another. Let's say it rised from here up to there. They're about let's say 84. You can take another 84. Let's say another 80 pips there. So the price is 1.39090. So 090 is what we take. You can always edit it. 1.39010. Okay, we can just it's just around there. I don't take so much time explaining that one, but you just measure this distance there, the 80 pips, and you take another 80 pips to the top, and you'll have some, that's another take profit, but you wait for this one to break above there, and then you continue. And having these higher highs, the higher lows, another higher lows there. When this MACD main line crosses above the signal, then you can buy comfortably. If you had the ADX there, you can see the ADX has very little power. That is 28, 24, okay, around there. So you can see that this yellow of the ADX, let me zoom it a little bit, the yellow is coming to cross above this, above the red, and then this power line is already slightly above there. So some hours from now, we could easily have price heading up there to that point. Yeah, so that's the GBP USD. It might be a short trade, but you know it's a good one. Eh? Okay, now the euro versus the Japanese yen. Yeah, so this one we have two conflicting possibilities. Eh? The first one is this. We have higher highs and we have lower highs. So this, this gives us that divergence, and the dominant MACD that has been up there has crossed below zero. So this could be a reversal. Yeah, this trend could have actually reversed. And if we put the Fibonacci retracement, then we are headed for the 23.6. You can see it is already giving some significance there. 50.0, very significant there. So we could be in a, it could be in a downward trend because of these long-term these long-term lower highs. And also these ones here, we could be in a very good downward trend. Yeah, so that is one possibility, which is the dominant one. The other possibility is we have this low point, and it's not yet at an oversold position, but it's headed there. Maybe we shouldn't waste time with it. But anyway, let me just point it out. So that one, we could be having this low point heading to this highest low, which could be this one. And then here we have this kind of divergence. Yeah, so maybe price will continue, but it will only be safe if it breaks above this highest point. So when price breaks above there, then you buy. So we have we have two conflicts there, possible conflicts. Price breaks below 23.6, we're definitely selling. Price breaks above there, we're definitely buying. So that's where you start putting in your penning orders. At this 23.6, I can just click just below there, and I put okay, so it has put the buy limit immediately, but I can put a sell stop there, and above there I can put a buy stop up there. Yeah, and I just leave that one. I will say if it goes up, here if it goes down, then my take profit will be at this 38.2 there, which will be about $20 on 0.02. So okay, anyway, you get what I'm trying to do. And so you can put your take profit at this 38.2. You can modify your penning order. You put the take profit there, which is that level, and you can modify the other one where you measure the distance between this and that line, which is 76 pips. So you put another take profit at 76 pips up there for this buy order. Yeah, and just like that, you can take advantage of this. Now the GBP JPY chart. This one is dominantly same thing. We could be having a reversal. So sometimes reversals happen. Many reversals can happen on many charts. So here we clearly have the lower highs, and here we have the higher highs. So this dominant one has crossed below there. Can comfortably put this Fibonacci retracement levels and maybe go for this 23.6 and maybe continue below that. Yeah, that is GBP JPY, the Australian dollar versus the Japanese yen. Yeah, it also looks like it could be, many of them look like they are reversing. The trends have really taken some time. So we have those higher highs and lower highs, and let me try and pin out where it started from. It started from behind here. So yeah, so from this you can see the significance of the 23.6. There is support there. 38.2, there is support and resistance there. 61.8, there is a resistance there. Yeah, so this one here could also be a downward, it could be a trend. When it crosses below 23.6, you can start selling, or you can take the obvious move at 23.6. Yeah, it could be an obvious move, so you can watch out for that. Next chart, Australian dollar versus the New Zealand dollar. Yeah, now this one, it needs some patience. We have the climbing bottoms, the higher lows there. Then we have these lower lows moving like that. And we have the MACD starting to stretch, moving upwards there. So this could be, it could be a reversal of sorts. It could be. It could be. So if we take this trend here, this previous trend, probably having this reversal between the 50.0 and the 61.8. So it could be a reversal, or it could be some kind of a retracement. You can see there was this retracement there previously, and it is dangerously in the same area. So there's a lot to watch out for. But if you look at the big charts, this is the daily chart. It's moving downwards. The weekly chart, this one, it looks like it's some kind of a sideways movement, but the daily chart is bearish right now, and so that could give us reason to continue bearish. If it goes upwards, it could be a short-lived upward trend, and it has really struggled for all this time. So this one here, it could be, it may not really be a reversal, but if we are to buy, it will be safe to buy above that high point, and it will be safe to continue selling below the lowest point. So this one here requires some patience. It's in a short-term sideways market there, but it requires some patience. You can take advantage of that sometime, maybe tomorrow or the other day. The Canadian dollar versus the Japanese yen, same thing. There's too many reversals. Too many reversals, and this dominant MACD is now moving down. In case we have a new trend there, the ADX. The ADX is also, it's not very certain. But once we have this red line has just moved above the yellow there to give us some kind of a bearish sign. But once it bursts out, that is a 25 mark. So it is still below. This all the lines are below 25. So when they move above, when red is above yellow, we shall have some good sign of a bearish move, and then we can start selling. Selling looks like a good trend to start selling. Significant areas there. 23.6 has significance there. 38.2 has some picture perfect break there. 50.0 has support there and some resistance. 61.8 has a lot of support and resistance. So this one looks very good. You can easily take this 23.6 obvious move. It looks very good anyway. It looks good. So if it works for you, you can take advantage of it. The CHF versus the Japanese yen. Most of these charts have the Japanese yen within them. They have been very bullish for some time. Now looks like we're at some kind of a reversal. Japan has been falling, but right now those brilliant people, it seems they have discovered new ways of bringing back their currency. So it looks very powerful right now. Also having a reversal there. It looks good. Okay. Significant places in history. Not really 23.6, maybe somewhere above there. Maybe this 38.2 has some kind of significance. 50.0, the perfect break. 61.8, a lot of price movement there. So this one also looks a bit, looks okay. If all these charts which have the Japanese yen as a secondary currency, when they start going down, they are all going to go down at the same time. The MACD is still dominant up here. It's weakening. You can see how it was very strong there, then it starts weakening like that. The ADX Yeah, it's not giving so much energy. You can see it just crossing from up there. That is slightly, this is, okay, it's just at the 25, exactly at the 25. And this yellow is just crossing above red. So, yeah, if you enter this market here, you might be there looking at this price movement for about, for some time throughout the night. You won't be getting enough sleep. Another one here. This one is New Zealand dollar versus the CHF. It's not picture perfect to have this high point. This one is higher than this one. Yeah, it's not really picture perfect. It's not doesn't look like a reversal. It doesn't have what makes a reversal. But what it has is this RSI heading for the oversold position. And if that happens, you can prepare for it. We shall have lower lows there and higher lows. Maybe if price continues moving downwards, you see that those arrows people draw for price action, where it is going to hit there and then continue up. So you could be having that same thing. But the safest place to buy will be above that one. But once this one here hits an oversold position, then you can, if your analysis allows you, you can buy. Okay, now this is the New Zealand dollar versus the Canadian dollar. So this don't yet have a reversal. Maybe we take this previous trend and see how far it has gone. It has just bounced off the 61.8. So for this one here, there was also resistance there in the back. It has met the same resistance, like the way this one here met this same resistance there, and this one also as well. So if it breaks above this one, then by all means you can buy to the 78.2 if it breaks above there. We don't yet have, it would have been good if we had an oversold position there. The RSI would have given us a boost to continue buying, to take some positions upwards, but we are limited within there. So this one here, it's not so good. But if you are planning on selling, which is very unlikely, maybe the 23.6, which is just near the 50. But anyway, this one here is still bullish. It's probably still bullish, but if it starts selling, then you can take profit there at the 23.6, maybe at the 38.2, where they have both met. The long term and this one here, they have both met there. There is a strong resistance there and there, so it can be a strong support if we have price moving against the trend. But this NZD Canadian dollar, it's not really clear, so personally I'll stay away from that one. Okay, and the last chart for today is the New Zealand dollar versus the US dollar. This one's at the same level, but let me delete that. These last ones, they're coming from an overbought position. Trying to look for some kind of reversal there, maybe. Okay, it's not yet, it hasn't yet matured to give us a real sign. But in the 30-minute chart, we have this. We have this one that has hit the oversold position, moving backwards to that point there, and we have that. Now this one we have caught it in real time, so now we can possibly buy to this mark there. I think they are, let me see how many pips they are, about 50 pips. Okay, from where price actually is right now, about 44 pips. So you can take the position and get some 44 pips up there. It's about 40. Okay, so 44 pips are about somewhere there. So that is the take profit area. You could easily take some profit there. Yeah, so maybe, you know, okay, on the 1 hour chart, I didn't really see, there are no real signs of a reversal there. So you can easily trade to that point. And I've already crossed above the highest, the most highest previous point, which is that one. Price has already crossed above there. So we can comfortably be moving, still be moving upwards. So I think, okay, I think that's the last chart for today. That's the last chart for today. So that was some simple technical analysis that can show you some points where a trend is beginning and where a trend has ended, and how you can take advantage of such things. If you don't appear in many charts, because to get these charts, I went through so many charts, and it came down to these ones. There are about 11 charts, and all these 11 charts, some of them are still not very good, but others are still somehow okay. But anyway, you can, if you've been recording, taking down notes for those charts, you can see how they're going to move throughout the day, and then we can see how to really pin other indicators on them. You can get your own strategy that you normally use, and you see how you can take advantage of this. So we shall do all this after that. Within the technical analysis month, at the end of it, you're going to be able to do all this easily. It will be very, very simple, very easy. You'll be able to do all this and even more. There is more to add to this. So these are just 11 charts, but we have 100 charts. So we have to be analyzing so many charts in one day. And that's what's going to be very, very useful within the month of November, because on that Telegram group, people will be, after we have got the knowledge, then everyone who points out something can post it there for verification, and then we can come in and verify it. If it's good, we trade. So within that month, you can make a lot of money, because we are going to be having so many entry points. It's going to be so interesting. It will be far better than robots and getting signals and all that. But here, what you will be seeing on the charts will be something that you can really recognize and something that you can really do. And it's going to be a lot easier as we move forward, because moving from this level where we are to another level where we are so much informed, we're going to be doing more complex ways. We're going to be analyzing in more complex ways, and we shall be getting very good trades. We shall be able to trade a lot of money without fearing. Right now you can trade $50, $100 without fearing, but you cannot trade $2,000 without fear, because $2,000 is a lot, and you may not trust that what you're doing will actually pay off. So, but with this, once we know what we are doing and we can verify trades, then even if it is 10K, you can risk it and you make some profit, because you have the confidence. You don't have that fear anymore. You have knowledge, you have information, and you have experience, and that will drive out the fear naturally. So that's what we shall be doing the whole of November. So to get there, to get to that group, you can search for Trading Dawn on Telegram. I was about to say something else, but on Telegram you search for Trading Dawn, or you can search for BVB Trade FX. You just join the group, then there will be a link to the technical analysis group for manual traders only, and then we shall kick off on the 1st of November. Very comprehensive analysis. So you can keep on looking at these charts and do some analysis of your own, and you can even take some trades. If if your analysis resonates with this one here, you can take those trades and then you make some money for yourself. So thank you for watching. Have a good day. Goodbye.